Welcome to That Annuity Show, the podcast that will make you an expert in explaining annuities to your clients. Give us 30 minutes each week and we'll shave hours from your client presentations. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler, and welcome to another episode of That Annuity Show. We've got a great one, a topic near and dear to my heart, which is AI and how we can put it in service of very good financial advisors. But just kind of quickly do some welcomes. Bruno, great to have you back.
Thank you. Great to be here, as always.
Yeah, it feels like it was only a few weeks ago we were hanging out in Las Vegas.
Yeah, that's right.
It was.
Making big bets on our retirement. Ramsey, good to see you.
Great to be back on the air. And I think the last time was indeed at the Vegas conference.
Okay, and Tisa.
Morning, everyone.
Happy to have you here. We're going to be talking AI, and this is also something you and I are working a lot very closely here at our company, so we should have an interesting discussion. So I'd like to introduce a great guest we have on our show, Mr. Jens Nordvig, who is CEO of Exante Data and co-founder and CEO of Market Reader. Jens, how did I do?
Yeah, you did pretty well. Like pretty authentic pronunciation of my name there. I get all kinds of versions of my name, so you're right at the top of the list there in terms of getting it good.
Well, I would just spend time in Europe, so I just came back. I was 10 days in Europe. So
It paid off.
It paid off. So tell us about your company, and I'm anxious to dig in. But how do you describe the company and what you do?
Yeah, so we. So as you can say from the long title that you read of, like I manage two companies, and one company is really a company that's servicing, hedge funds and institutional investors around the world. But the second company, Market Reader, is trying to really generate insights that can be used by a very broad audience, not like a little niche of a couple of hedge funds, right? So the basic idea is that everybody has an interest in understanding what's going on. Like, why is this asset going up? Why is that ETF going down, right? And Market Reader is designed to give very short, precise explanations of what's going on automatically as they happen, right? So it's something that we've all tried to do kind of manually as humans over time, trying to figure out what's going on in the market. And now we've put that all in a piece of software that we call Market Reader. And essentially every few minutes, the software updates, scans everything. Really important that it looks at all assets at the same time, right? Because lots of markets are linked. And it gives you a paragraph that says, like, for example, today, right, gold has been rallying, right? So if you go to the gold miner ETF, it will give a very simple explanation. Gold miners are rallying. It's highly likely driven by the higher gold price, right? And the same thing if you go and look at commodities more broadly, you can find, XLE will be driven by what oil prices are doing and so forth. So we have like a broad set of explanations of what can be going on, right? So I just gave an example of like how different markets are interlinked in a very simple way, sometimes more complicated. Can surely be news, right? So companies obviously move on earnings. It can be macro events, right? The Fed says something, right? Moves the whole fixed income markets. It could be somebody tweeting something, right? So we try to have a very broad spectrum of possible explanations, scan them all in a high frequency space, and get to the gist of what's going on. And I think we have really achieved a lot. Like when we started this company 2 years ago, we didn't know whether it was possible. So it's quite exciting to see that it's working, right? So I had a goal for this company, like all the interesting moves in the market, right? You might have several hundred in a day. Like these are the things we want to understand. Like we wanted to at least explain 80% of them. And I think it's fair to say that we're above 90% now. We're still working on getting the last few percent in there, right? But we can explain a lot of price action in this tool. And it can save a lot of people an incredible amount of time. Lots of people don't have, 24 hours in a day to understand what's going on. Markets are complicated, right? So it can save a lot of time if you have like a good technology that does that work for you.
Well, let me and I'll just kick off the first question. I'll double click on that extra time. So I'm an annuity agent. I also have an RIA on the side. This is fictional, Paul, but maybe I have 100 clients, who I've got assets under management. I may have 300 or 400 people I've sold annuities to over the time. how would this give me more time? What would I do with the information that the market summaries that you're providing for me?
Yes, I think in the RA space, right? So you might have like regularly like client questions coming in. Okay, why is Meta down so much today, or how come Exxon had this gap, right? So by having access to Market Reader, you always know that within a second or two you can kind of pull up and get to the gist of what's going on. So it gives you an ability to do client service. It could also be that, every weekend you want to send out a newsletter that gives some color on what's happening in market, right? We have every morning a newsletter that we call the Market Reader Minute. It's available for free. We use it to show what this technology can do, right? So if you go to marketreader.com, you can sign up for free for the Market Reader Minute. And what that newsletter does, it uses all these building blocks that we create in real time. It puts it into an email, and around 8:40 in the morning before the market opens, we say, okay, this is what's going on in the world. These are the big moves in the ETF space. These are some of the stocks that have interesting moves, right? And that email, you can read it maybe in a minute, but you can also generate it in a minute. If you had to generate that content from scratch, it might be 5-6 hours, right? So in terms of like keeping clients up to date, up to speed with what's going on, this is something that can save an incredible amount of time, right? And obviously the Market Reader Minute is one email we send out, but actually in the next couple of weeks, we're going to launch a whole menu of these updates. So if there's some people who are specifically interested in tech, they're going to get the tech update, right? And obviously for financial advisors, the final evolution of that is that the newsletter becomes bespoke to the client. So not just whatever topic they're interested in, but actually talking about whatever is in their portfolio. So that's where we are going. Hopefully as fast as possible, we're getting to that end destination. But that's where it gets really interesting, where the content is bespoke to the client.
So I've got a question about how the technological advances of the last 2 or 3 years have made this possible. I mean, could you have done this in 2019 or 2020, or is it really the advent of large language models being widely available that has made this possible?
Yeah. So that's a really good question. I'm glad you're asking it, because when we started this company, it was really about building a lot of quant models that kind of gave possible answers as to what's going on, right? So, I'll stress this point about watching everything at the same time is really important for understanding what's going on, right? If you go and look on the screen, right, and you see that Google is down 1%, okay, your first inclination is to go and look, okay, what's happening to Google, right? But if you're at the same time as watching the S&P and you find that S&P is down 2%, you're going to look for a different type of information, right? Yeah. You're going to find, okay, there's actually something driving the whole market. I don't need to even look at Google. Actually, Google's outperforming, right? Mm. So that's the simple explanation of why it is so important to have an infrastructure where you look at everything in totality and try to generate insights. So what we started with was a lot of quant, like, is this stock outperforming relative to the market, relative to the sector? That's already gives you a gist of what's going on. Is there any event on the calendar that can drive this stock? So we have all these different frameworks, but what the AI layer allows you to do, and I think we might as well just call it LLM, it's the ability to put all these bits and pieces into a type of text that everybody can read. That's what's new. 2 years ago, you just couldn't do it, right? So that allows us to present the content instead of maybe a couple of quantitative bullets that are kind of dense, not very nice to read. Now we can summarize all that content that is a mix of quant and news into a very easy to read paragraph. So LLM AI is game changing from that perspective. And I think it allows actually this technology to be used by a much bigger audience that may not have the quant skills to get what is underneath the surface, but they can still get the conclusion.
So I'm gonna double click a little bit further, because I one of the things that I found in my own research around AI for my business and for my board work is that there's still a lot of elements of it that require some sort of understanding and nuance. And as I as I watched your webinar, I and heard some of your colleagues speak, I thought you guys articulated what some of those differences were really well. So let me put it this way. So you've built this model. It gives these great answers. And then there's some people are going to say, well, okay, well, why don't I just go to ChatGPT and ask that question? So the question, help us understand how, even though ChatGPT has this broad access to information, it's a little bit Wild West. And, what you're offering is taking all that information and structuring it and collating it and building it towards an objective that you've ultimately created. And that, how should they think about the difference? What should keep them from being tempted from trying to do it through ChatGPT and going with your product?
You're very welcome to try. try to use ChatGPT to understand what's going on in the market today. It's definitely not going to work. You can also try to Google what's going on in the market today. And actually, if you Google, I think it's fair to say that the results are getting worse and worse, because actually what is on the Google page now is increasingly contaminated by, advertising, but also by kind of robotic AI content that's very low quality, that's just there to generate clicks, again, for advertising purposes, right? So what we do is almost the opposite, right? It is a system we have built where, even though there's an AI layer, that AI layer only gets spoon-fed very, very specific pieces of information that we think are crucial to the questions that we're trying to answer, right? So we will have, quantitative frameworks that is based on high-frequency price action. The client doesn't need to know that, right? But we need to have that in order to be very precise about the causality in the market. Same thing. We will have like specialist news wires coming into the system, right? So for example, if there is a bank that upgrades a stock, that's something we will know about instantly, but it's not something that's available on Google, right? So we pay for that information. Same thing. We will have a process within our system where we scan everything that's going on social media, Twitter, and so forth. And that requires an incredible amount of filtering. Like in terms of the social media content we use, we get rid of more than 99% of it. And then there's 1% left, right? But that filtering is like set up in a very specific way that gets rid of an incredible amount of noise. And if you don't do that, you're going to end up with a lot of, frankly, garbage in your explanations. So it's really about having this incredibly curated process. And then what we use the AI for is to, within that curated process, within that extremely filtered information flow, we allow just the summarization to happen using LLM technology, whether it's OpenAI or something that's better, right? But it's just used on this. It's like, you're garbage in, garbage out, gold in, gold out, right? So we try to have a very, very high quality stream of information that we use for summarization, as opposed to looking too broadly, frankly.
Right. Good
I have a question.
Appreciate it.
Yeah, thanks. And I want to dwell in on time horizons. And if we think of the whole Wall Street ecosystem, I mean, you have traders who look at time horizons that can be counted in hours, if not minutes. You have analysts who are looking for maybe a year or so. And you have Warren Buffett that looks at an infinite amount of time horizon over its investment target period. How do you see AI changing that ecosystem, changing the shift in dynamic of various players in the equity market, or for that matter, every market out there?
Yeah. Well, so the first thing I would say is that you say, okay, some traders trade within minutes. So I'll just tell you an anecdote. So I used to work on Goldman Sachs' trading floor in New York. And I was a desk strat, so my job was to interpret like news when it came out and literally shout out on the trading floor what I thought the traders should be doing, like euro up and down, like interest rates up and down, like basic stuff like that. And I was doing that like 20 years ago, right? And then while I was doing it, it became the case like that this thing about shouting out on the trading floor was not fast enough relative to the high frequency trading guys that sat in Chicago and did it algorithmically, right? So there we're not talking about minutes, we're talking about literally about milliseconds, right? Initially I could shout within a couple of seconds, but a couple of seconds were not fast enough anymore, right? So we're definitely going through a speeding up process of everything. And this tool is not meant to beat the high frequency trading firms in Chicago, right? This tool is meant to give fundamental insights to a huge audience. And the main building block of our tool is high frequency in the sense that, in a given day, there can be, many different reasons why a stock moves, right? So if you're not in high frequency, you're not going to be precise enough about which one is it that is driving the market, right? But the main building block we have in the system, and it's a human choice we made, is a 10-minute building block. That's a building block length that we believe is striking the right balance between being fast, high frequency enough to figure out what's driving what, but also giving enough time for information to actually accumulate, whether it's somebody tweeting something, whether it's like news being digested in the market. So that's the main building block. So I think in terms of how this is going to impact the market, I think it's going to mean that a bigger audience is going to have access to very high quality information within a couple of minutes, not spending the rest of the day figuring out what's going on. That's the goal, right? So I've from a personal perspective, right? I spent a lot of my career handling strategy for institutional investment firms or dealing with clients in the institutional space, right? And I think what's really fun about what we're doing now is that we're building something that can benefit not 100 people around the world, but maybe 100 million people around the world to give much, much broader access to this type of analysis. So that's basically the reason why we wanted to do this company. It's hard work, but I think it's going to be rewarding if we can help that many people.
Yeah, we're go ahead, Tisa.
Yeah, and so I had a question. So I agree with you, right? Sort of that 10-minute cycle, sounds like the number of sources that you're reading, digesting, comprehending is lightning speed ahead of what a human could do on their own. So I definitely can appreciate that. I have a question of kind of what the initial reception has been. Are people excited about the tool because it's AI, or are they not even concerned of what's powering it? They just are consuming the tool and getting excited because of the information it's bringing to them, if that makes sense.
Yeah.
Does it feel like a highly customized, tailored content, or are they excited about the AI piece? Because there is some apprehension, right? So if they hear AI, are they like, oh no, I don't know what's happening? Or are they like, oh, I don't really care what's happening in the background. This is exactly what I need when I need it. So I like the tool.
No, so I think there's a lot of people who are skeptical about AI, right? They've heard about hallucinations, like when the AI comes up with some random stuff that is not real. If you're dealing with financial institutions, right, there are financial institutions we deal with that have a ban on AI tools. Yeah. Literally, they are not allowing any AI tools in their business, right? Because they haven't had capacity to think it all through, right? So different organizations obviously at different ends of the spectrum. Some other organizations say they only want to invest in stuff that is AI related, right? Because they believe that's the future. So it really depends. So I think it has a lot to do with actually how young organizations are. And I don't mean like exactly how long they've lived, but like kind of what's the culture of embracing technology. And the more we see a culture of embracing new technology, the more they're willing to move on it. This is a tricky thing. So we have a cooperation with NASDAQ, right? We get very important market data from NASDAQ, and we're an approved vendor from NASDAQ, right? But we're also in a new category of content, right? So there's lots of people who redistribute NASDAQ data. That's certainly not what we do. There are other companies that, do derive data from NASDAQ data, right? But we create news summaries where the market data is a peripheral input, right? And all kinds of other input go in there. So we're a totally new type of content. Like when we deal with vendors and partners, like we're out of category, literally out of category in terms of what this content is, right? So that is obviously something that if a compliance or legal process is set up in a certain way, okay, what do you do with the out of category one? You need to think about it a bit fresh. So like we have to be humble about what this content is, right? So there's going to be situations where, okay, this stock is down, the earnings were bad. It's very easy to understand what's going on. And then you have market moves that are very, very hard to understand. What the heck is going on, right? Can we expect the AI supported system to come up with a much, much better explanation that any human in the world would ever be able to come up with? That's putting too much pressure on the technology, right? So I think we also need to have a system where we say, okay, if there is no fantastic explanation, maybe we say, okay, we've used all the different methodologies we normally use, and this move is hard to explain. That might also be okay.
Well, just piggybacking on Tisa's question a little bit, this is, we have ulterior motives too from getting you on here. So Tisa's question around the promotion, the value is very interesting. So we've got a tool we're kind of slowly rolling out that's a marketing content generation engine for an annuity product. Now, very different market, but there's some similarities there in terms of how we're doing it in the compliance concerns. Okay, some of the value prop we lead with, I think, is probably we're dealing with some of the same issues you are. Is it, we give you back time. You don't have to spend time digging the stuff up and creating this. We make it simpler to understand complex topics. If I think of your value prop, I could say, you're avoiding having to hire an outside firm necessarily to create your newsletter. You're going to have more potentially accurate information that will be better than this other stuff. It will allow you to offer services you might not have been able to offer. Maybe you couldn't ever do a newsletter until you did this. What's resonating most with the customers you're talking to right now?
Yeah, I'll give a very specific example, right? So asset managers, and that could be a traditional asset manager, it could be financial advisors that have an asset management type product, right? They have a responsibility, maybe even a legal requirement that they have to keep their clients up to date what's going on, right? So we can use the building blocks that we create within Market Reader to also describe what's going on within asset management products. So a lot of asset managers now have like a quarterly update of sorts, right, that they send out. Okay, what was the performance? Why was the performance a little this and that? Which investment decisions and assets in the portfolio drove the performance, right? Since we are generating around the clock these explanations of what's going on, why certain assets are moving, we can aggregate that content and actually explain portfolio performance. So
interesting.
So when the asset manager is looking, okay, what do they do now in a human-driven process? Almost all that content is like human manually generated now. Now they say, okay, we can literally generate this every day as opposed to every quarter, right? They can have like information at a totally different quality level now, not just checking the box, we have to do it quarterly. We can actually use it for marketing at any frequency that the marketing or sales team need, right? Daily updates, what's going on in the portfolio. Before, they just couldn't do them. So having it done in an automated way where it's a process that you can tailor what you need to achieve, as opposed to just like some boring task that needs to get done because it has to get done. It's two different things, right? So it actually allows you to say, okay, this is the thing we need to get done. How do we get it done best? How do we actually improve our business from it, as opposed to just being a source of pain and cost in the organization?
So it was just very interesting sort of listening to all this and thinking about all the possibilities. So, I was at Goldman for 21 years and heard Jens yelling, right, to people like me in the sales force and other colleagues. And, from 1 minute to the next, like, the challenge we had is institutional customers would call up and say, tell me why XYZ happened in the last 10 minutes. And so be a scramble to sort of figure it out. And by the way, it's not a perfect science, right? But I will say this, like having spent, a very long career in an institutional setting and then being, an entrepreneur independent and and being more in the personal finance, financial advisor sort of realm, like the difference in sort of quality access to information is very, very different. Right. And so, to your point earlier, Jens, like if you do a search on anything, anything in the market, a stock, whatever, a lot of what shows up in the search is there are things that are clearly written by people that don't even really know that much about the underlying asset, the company, whatever, but they're just generating content for the sake of generating content. So I look at this and I say, like, the potential here is, I think we should never expect perfection because humans were never perfect, but that we can shift what's broadly available, sort of democratize. We can shift what's broadly available to something that's a lot higher quality than what shows up now, because it's shocking to me some of the things I read, right? About specific companies, specific assets, and few people would be able to capture, again, the cross asset correlations that you talk about. So it's very interesting.
Yeah, no, I very much agree with how you're phrasing it, and it's actually ironic that in the public space, I think the quality of the information that's available is going down quite rapidly, right? Because we have so much contamination from robots that are trying to game the SEO systems in the search engine and so forth. So there's actually more of a need for it now than there perhaps was 5 years ago, because it's getting harder and harder just to search information.
It's interesting. A very small world, as I was trying to remember at the beginning of a call, but I thought, okay, ding, the bell, like the bell went off. I was out in Las Vegas having lunch with Bronislav, our friend from the Index Standard, and learned that I think Evan, who's on your team, is on his board.
Yep.
And they're doing some very similar but slightly different stuff in the insurance field. Any sense? I can clearly see how you're going to change, how you could change the game for me wanting to be an independent RIA, right? I think it's suddenly I don't need to be affiliated with a big firm to actually provide great service. How do you think this is going to spill? I'll push you. We didn't talk about this. How is this going to spill over into other aspects of insurance, like being able to explain index performance, being able to explain, fixed, the movement of fixed income, which is a little more, even less opaque, perhaps, than other equities.
Yeah, I think if like the part of the reason why we've had an equity focus is just for commercial reasons, right? That a lot of eyeballs are on the single stocks, an incredible amount of eyeballs on the ETFs, right? So in the ETF space, like what's cool about our system is that if you have, the NASDAQ ETF moving, right, we can kind of go two routes to explain what's going on there. It could be a macro reason, right? Something happens that moves the whole index, or it could be specific companies that have a big outsized contribution, right? So in terms of when we explain what's going on, we go both routes. And I think that gives some very cool content around the ETFs. We also have content that covers the fixed income space, right? So because certain macro events are really important drivers of the fixed income market, right? So it could be US data releases, it could be FOMC meetings and so forth, right? So those are important catalysts for what's going on. And we also have a global aspect of what's going on, right? So sometimes you'll have, US interest rates are moving just because there's a big move in global interest rates, right? And we will capture those again by monitoring all the assets at the same time. So our goal is to have all assets in the system, right? At the moment, we have, 20,000 assets, of which most of them are single stocks. Good chunk is ETFs, right? And then we have a bunch of macro instruments, right? But we want this to cover all assets. And the more assets we have in the system, the more the correspondence between all of them is something we can lever and get better and better at explaining all the moves through all the interlinkages.
So how do you balance the qualitative and the quantitative information that you have on your platform? How do you commingle all of that information together in terms of translating it into useful insight information?
Yeah. Well, I think the easiest way to answer is just give an example, right? Over the last couple of weeks, there's been a lot of focus on, okay, what's going on in Japan? Why is their currency going down so much, right? So that may not be relevant for all investors, right? But a lot of people own international stocks, right? And if they own EWJ, right, which is Japan ETF, okay, they actually should know about what's going on in the currency because it's going to impact how that ETF is performing, right? So to give you just a very simple example, right, we have a model within our system, right, that just all the time says, okay, the Japan ETF is down 1%. And half of that is just the currency going down, right? So we will have a model that literally just does the quant there. It puts it into an easy piece of text, Japan ETF is down like mostly because the currency is moving, right? So it's easy to do. What's really cool about that from a business perspective is that all that content is generated inside the system, right? So I don't have to buy any Newswire feed. I don't have to ask anybody's permission to use it, right? It's something we have generated inside the model, and we can do whatever we want with. And there's a huge gap to fill in the market there, right? Because ETF content is actually very sparse. There's a lot of people who do good content on Microsoft and Apple and so forth, very kind of like competitive space. But for the ETFs, a lot of platforms that have ETFs on them have almost no color on what's going on with ETFs. So our ability to put simple narratives about some of these things that is actually just pure math is actually a really good edge that we have at the moment.
Yeah, and you mentioned a few minutes ago, kind of on your roadmap, this idea of like a bespoke newsletter coming,
Yep.
In the future. What are some of the other potential needs in the marketplace you think that your technology, I mean, to the extent you can share what's on your, future plans, that you think that your technology can solve for the market?
Well, we can kind of take it in phases, right? So certainly we would like to have a bespoke newsletter, right, that goes to each client and talks about the client's own portfolio. Like if you think about it from a marketing perspective, which email do you think people are going to open the most? The one about their own portfolio or about somebody else's portfolio, the market portfolio, right? They're clearly going to be more interested in their own returns. So that's a big step. You can kind of take that one step further to say, okay, rather than just talking about, okay, what is going on with the assets that you own, you can also write a story that really says, okay, why was your overall performance this, right? So not just do the building blocks, but actually say, okay, over the past month, right, we were up 6%. And really the big driver of that was maybe interest rates moving or something like a big theme, right, that impacted a lot of assets. So that's sort of a portfolio level concept. And then we can take the final step would be, okay, so we're doing a podcast now. Like maybe the final destination of that is that you get a custom podcast every morning that you can listen to about what's going on in your portfolio. Maybe you can even pick your AI podcast of if you think that somebody could be better than Paul or Tissa, right? Maybe they want Kim Kardashian to read it out or whatever. But I'm joking a little bit. But like this idea that the podcast could be custom is totally doable.
And generated, yeah.
Well, listen, I love the future. Now, I can also hear our compliance officer, his head exploding. Listen, we're going to send, we have how many, 400,000 clients. We're going to send them an individual email. And you talked a little bit about sort of, I think we may have talked about this before. It's like, what kind of organization is right for a tool like this? What does a compliance department have to look like to adequately supervise this kind of material?
Yeah, it's a tricky balance, right? So I think the client should always be aware what kind of content they're dealing with. Is it purely human generated content? Is it AI content that is approved by humans? Or is it raw AI generated content? I think we have to move to a world where there's kind of like a stamp of sorts so that you can see what it is. Same thing for images. Like these days, like when you view a video, like you have really no idea whether it's a fake video. We should have some kind of stamping so that at least there's some people that have been willing to say, okay, this is my stamp of approval. This is real stuff. I think we have to go in that direction, right? Because the sort of boundary between fake and real stuff is getting very, very blurry. And we just need to deal with this new type of information. And I think that this is the feedback we get from users as well, right? That we generate an incredible amount of high quality information, right? But it has to be read in a slightly different way than human content, right? Because it is coming from a different process, and there's not the same kind of like vetting in it, right? So the users should be aware what it is.
No, that's just wonderful, and I think there's a lot to speculate on for the rest of how different users speculate in the market, use information. Any word on how let's say the first user that would potentially use this, the typical equity research analyst, how are they going to adapt AI, your tools? Let's say the typical analyst that's looking at maybe 20 stocks. How do they get that hedge on others with AI in general and your product?
Well, so I think the way I would think about it is, okay, where is it that the AI technology is really gonna add value first? It has to do with scalability. It has to do with repeatability, right? So we're gonna do a race between the best equity analyst in the world from Microsoft and this AI technology market reader, right? Okay, I'm not going to sit here and say for that specific stock, with the best analyst in the world, are we going to do a better job than him? That's not really what this is about, right? Maybe we'll get there. But the thing is, if we do a race where we say that guy who's the world champion of Microsoft, okay, what has he got to say about the 10,000 other stocks that he don't cover? And put the technology up against him where you can pick, 1,000 other stocks. Pretty sure a market reader can do a better job than him in the ones he don't follow. So that has to do with the scalability, just doing lots of instruments at a time, right? And then there's an element of repetition, right? So if we look at the Microsoft analyst, right, and then we say, okay, we ask him, and we know he's the best in the world, right? Okay, what happened on the 3rd of October 2021 that took Microsoft down 0.2%? Like, he's obviously forgotten it. It was not a big day. But the system will remember, right? And the system will remember that we actually had a lot of 0.2% days in October that year, and actually added up to a big trend that month, right? So that has to do with the repetition in it, right? We will store all of that, right? And actually, for historical analysis, it might be pretty good. Like we have a hedge fund client that we deal with, and the way they use Market Reader is that they have a process in place. The investment committee requires, before they invest in a stock for the first time, they need to be able to explain what happened to the stock over the last 10 years in great detail. And that it takes them, in a human process, 3 to 4 weeks to do a report that explains everything that happened in that stock in the last 10 years. Ideally, we want to do that in Market Reader in a couple of seconds. So those are the examples. Okay, a very tedious task that potentially can be done by humans, although you might get very annoyed, frustrated, bored in the process. That can be done better, right? But if we ask the world-class expert on Microsoft, okay, are they going to have a management change at Microsoft over the next couple of months that can be important for the stock? It's very possible. that because he has had management meetings and all that kind of stuff, he has better insight into that, right? But so I think a lot of this has to do with figuring out where's the AI going to be grabbing some low-hanging fruit, as opposed to thinking that the AI is going to be better at the most difficult task in the world, right? And that's really why it's a combination of human creativity. And now we need to put our human creativity to work to figure out how do we weed out some of the tasks that we don't want to get done, right? How do we want to save time so we have more time to spend on the fun stuff?
Yeah.
That's why I think this whole process is so positive, right? Because it actually should give us all more time in the schedule to do the things that we really think are value-added tasks.
Yeah, I think framing this in time is probably the most powerful value I think we can promote as this. And I agree. It will not replace it's not going to replace good advisors. I think it's going to allow good advisors to deliver better advice to more people. So
can I give one example?
Yes.
Like when we had Silicon Valley Bank cracking, right? In that infamous month of March, right? Like Market Reader was very helpful initially because as a kind of risk management tool, because when there's something big going on in the market, it immediately says, okay, this is the epicenter of what's going on. So I never had Silicon Valley Bank on my screen. I had on the bank, immediately put up First Republic as the number 2. So it was good at that. But actually, lots of, I'm sure the banking analysts at all the research firms were also on top of what's going on, right? But what I found very helpful at that time was, okay, now I want to stay on top of 300 regional banks to make sure that I'm not missing, some other bank run, right? And having the tool being able to scan within my watch list, I just created a watch list for all the regional banks, right? And I had them all monitored there. Was very helpful, even on the days where there was no news, because I was sure that, okay, I've done the best I could to figure out there really is no news. Like we had many of those days where KRE was down like 5%, and there was really no reason, right? And that's actually what you want to know. I'm not missing anything.
Right.
So, and that has to do with the scalability as well, that you can monitor 300 stocks very easily. So key here is to use this technology in the way where it's going to grab some low-hanging fruit for you.
All right. Well, hey, listen, thanks so much. We're at the top of the time. Jens, thanks so much for your time. Where should people go to find out more about you and your product and what value it can bring to businesses?
Yeah, so everybody can go to marketreader.com and you can trial our software if you want to do that. If you want to start smaller, you'll sign up for our AI-generated newsletter. That just means you get an email in your inbox in the morning. We've had thousands of people sign up for that since we launched that. So it's almost like I would recommend to start there, because then you get like one example every morning in the Market Reader Minute that says, okay, these are important moves in the market, right? And you don't have to spend more than a minute on reading it. And that gets you familiar with the content. So go to marketreader.com and sign up for that newsletter. And that will give you a sense of what it is we're using this technology for.
I just did.
Okay.
It was that easy. All right. Again, thanks so much, Bruno, Tisa, Ramsey. Thank you. And we want to thank our listeners. Be sure to join us next week for another great episode of That Annuity Show. Thanks.
Thank you.
Thank you.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more information at thatannuityshow.com.